warm welcome to Personal Finance. I am Gugulethu Cele. Today we are coming to you from the Discovery Financial Planning Summit for 2015 at the Sandton Convention Centre. Well, we know that there's several changes to the financial planning market, especially the fact that we're moving towards a fee-based model. Is this unique to South Africa? Are there lessons that we can learn from our international counterparts? Well, I've got two guests with me here to give us more perspective on this particular matter. I'd like to welcome first Justin Gilmour. He's the MD of Integro Private Financial Consulting in Australia. We're also joined by Shirley Drummond, who's a certified financial planner and a tied agent with Discovery. Lady and gent, thank you so much for joining me today. I'd like to start off with you, Justin, just to give us more perspective on this significant move, especially in the South African market. I understand it's taken place in Australia already, but moving towards a fee-based consulting when it comes to financial planners. It's being met with a lot of nervousness, but your understanding of the objective?
Look, I think it's no different to what we went through in Australia. There's a lot of apprehension when it was first announced, but what I think overall, looking back now, I think it's a positive move, and I think it'll be great in terms of instilling a lot more professionalism into the industry.
Shirley, do you agree?
I do. I think it's something that, as you say, there's a lot of apprehension around it. It's something that's been talked about in the country for a good number of years now. It's just a case of how do we introduce it. There's a lot of changes coming through in terms of legislation that I think is going to assist us in adapting to the new model. But I think it's more of an educational process that needs to be gone through from the consumer, the product provider, the intermediary, the financial planner, the broker, because it's fear of the unknown. But at the same time, I think it's what does the public want? How do we address what the consumer needs? And at the same time, try and meet the regulations requirements.
Justin alluded to the fact that this has the opportunity to bring, more of a quality service to consumers across the board. Do you share these sentiments? And I say this because we obviously need to reflect on what was wrong previously, where personal financial planners got, basically commissions from the products that they sold. Was that whole system fundamentally flawed?
Look, I think that's a debate on its own, and I think it could be quite controversial. I think Justin, in our chat a little bit earlier, alluded to the fact that advice is given and a solution, a product is used to actually meet that need in terms of that advice, in terms of how much life cover does a family member need in the event of an untimely death, etc. Was it unfairly remunerated in terms of commission? I don't believe so. I think perhaps, like in any industry, there's good, there's the bad. But I think if you have an advisor who has the client's best interest at heart, regardless of whether that product offered commission or not, that product is going to be put into place. It was a way in which the advisor was able to be remunerated. Was it exorbitant? There could be a lot of advice that's given where there isn't a commission that's paid in. So it always, you won on the swings and lost on the roundabouts. And I don't believe it was flawed. I believe that there was an opportunity for it to be exploited in terms of churning of policies, etc. Having said that, we've got to change. We've got to adapt. And I think our way in which we adapt and grow is going to determine whether it's going to be successful out there and how we adapt to it.
I think also, though, it's a matter of if it really changes the conversation. So from an advice perspective, if under the new legislation, clients will then understand that there's definitely alignment with their advisor. So, is everyone's interests aligned? So that can be debatable when there's a commission involved, if someone's paying a fee. But what I don't think could happen is, or would be successful, that, with commissions going, product costs needs to come down so that an advice fee can be charged. So in Australia, you'll either get expensive product or you'll pay for advice, which is a nicer discussion to have.
There was a word you used earlier on today about the change in mindset from the advisor's perspective as well as from the client's perspective.
Totally.
Are we on the right track with regard to changing this mindset? And maybe if you can give us some lessons learned in the Australian market, because in South Africa the disparities between the have and the have-nots are quite pronounced, as Shirley alluded to earlier on.
I think from it definitely increased the cost of advice to deliver advice. So in Australia there was and that was an issue for the people that couldn't afford advice. I guess then that what it made us do, or what it required us to do, was to then change our model. So we operate a private wealth model, but we also operate a transactional model where not everyone needs a full financial plan, not everyone could afford the cost of a financial plan. So it might be that, but we had to also address the underinsurance issue in Australia, so people need to be able to have access advice, but more cost effectively.
Shirley, I want to get your voice into this part of the conversation, making sure that the advice gets out to those who need it most, but we also need to balance, as Justin alluded to, the cost involved here.
Yeah, I think that's a very big question that's asked by most of the advisors out there, is how do you establish what this cost should be? And I think we're going to need to seek a lot of advice and guidance, I guess, from regulators, guidance from what's happened and how it's been brought in around the world. How do you make it affordable for the end user, yet at the same time pay for the skills and the ability and the advice that is being given by the professional advisor? There's going to need to be a lot of debate around that in terms of what is valuable, how do you charge, how is it made affordable to the entire spectrum of the market, and not necessarily the elite, the wealthy, because it's a case that needs to be brought in right from as soon as a school leaver leaves and starts to work in the workplace. They need to be able to have access to advice. Are they able to afford to? As Justin has said, sure, products are going to need to be adjusted accordingly so that advice can be included in that. And advisors are going to need to change the way that they deliver advice and they run their business. There is a huge change that's coming, and we need to make it positive. It's a question of how do we do that, and the debate starts, and we need to continue that debate going forward.
I think, sorry, just to interrupt, I think it will also require like an awareness campaign and a mind shift with consumers. So, if you want independent, impartial, transparent advice and fee for advice, then you're going to have to be prepared to pay for that advice. They don't go to their lawyer and, they pay for advice. It's no different. So that's the mind shift that needs to happen, but that's an awareness program that really the regulator needs to get involved in putting out to consumers.
So active participation from private players, the public players, everyone quite clearly. But are there unforeseen and unintended consequences with regard to this regulation? You can give us again examples here as to what happened in the UK, and maybe in perspective of brokers not being able to survive and just cutting their losses to leave the industry.
I think what it did is it definitely it made it more difficult for single operators to remain in the market. The cost of delivering advice definitely rose. I guess though what it did do though is it made perhaps some of those people operating in the industry that perhaps shouldn't have been in the industry to exit the industry, which I think was a positive thing anyway.
Shirley, I take it you agree?
I do. I'm concerned that the lower income, the needy in terms of advice and not having access to it may by default not necessarily get the advice initially until there is huge initiatives coming from the corporations. So I'm not quite sure how that's going to be addressed, but I do believe that it's going to be a change. We're going to see change. The consumer is going to need to see change. The product providers, the advisors out there are going to need to change, and I guess how we adapt is going to determine its success or not.
We've highlighted some of the key challenges, but I want us to look at how we can make this sustainable. And Shirley, you've been in the industry for quite a while and have worked as an independent financial provider as well, and also affiliated with bigger corporates like Discovery as you are today. But is there best practice that you, in your own experience, might be able to put to the table when it comes to collaboration and conversations taking place between all stakeholders?
I think there is. I think it's a case of working smarter, understanding that it's not product pushing, that it actually is advice driven. I think it's a case of phasing it in over a period of time. I don't believe there's a large percentage of brokers over there. Yeah,
the transition period is critical.
How long did it take Australia? How long was it phased in?
I think it was around 18 months, but really I guess it's that whole, it is a mind shift though for the advisor in terms of that, and ultimately what happened was that product sales off the back of advice actually probably increased, and conversion rates can be increased as well, because for the reason that the advice was strategic advice, the product was the last piece of that. The product is only there to support the advice. As a client is paying down debt, as they're approaching retirement, their need for insurance, and this is a great thing in terms of developing trust with your client, the need for insurance declines as you get older. So if you're reviewing your clients and going back to them with that conversation, very powerful.
That also brings us to something so critical that you've both alluded to, and I've also heard in previous conversations, the relationship between the advisor and the client. It boils down to trust. And I take it that that's also something that needs to be instilled, so that when the client takes out that money to pay you for that service, they understand exactly where it's going to.
Yeah, so in Australia we would have every client is on a service agreement, so the client signs off on that service agreement, and it's our obligation to make sure those services are provided. So at the end of each year we are required to then give them a fee disclosure statement, so that it highlights very clearly, it's very transparent, these are the services that you received for your fee, and perhaps in some instances these are the services that we agreed to that didn't get delivered. So it forces you though from a practice perspective to make sure that you're delivering on service and there for your client.
Just before we come to the South African example, Shirley, where obviously that transition period is about to take place, and the kind of conversations you have with your clients in South Africa, what are the key questions that they ask you, and is there particular advice that you actually offer to your clients and providing them with ease and comfort in knowing that the change will take place smoothly?
It's a very difficult question, because I think each customer, each client has their own set of needs. I think the questions that need to be asked is, what are you as a financial advisor going to be offering me in terms of a service? What level of advice are you giving me? And building that trust and growing and developing with the financial advisor that you're working with, regardless of the remuneration model that's being applied at the time.
But I think the key with what we found with that transition was more time needs to be taken up front. So rather than just telling them what you're going to do for them, asking them, what's important to them. Where do they want to be? When do they want to retire? Are they working because they want to work or because they need to work? Do they want to leave a legacy for their kids? Those sort of things. So that conversation should be 45 minutes to an hour at the start to actually work out what's important to them. Then you build your offer around that. And the advice should be structured around that to support those objectives. And often a client won't know what their objectives are, so you need to have that meaningful discussion at the start to gather that.
Well, that's where we have to leave it for, unfortunately, for personal finance today, but it certainly is a conversation that can continue for days on end. I'd like to say a big thank you to both my guests for joining us today. Justin Gilmour, the MD of Integro Private Financial Consulting in Australia, as well as Shirley Drummond. She's a CFP and tied agent with Discovery. Well, we have come to you from the Discovery Financial Planning Summit for 2015, taking place at the Sandton Convention Centre. Get in touch with us and share your thoughts with us as to what you make of the move towards a fee-based model in South Africa for financial advice. For CNBC Africa's Personal Finance, I'm Gugulethu Cele.